All right, as we previously discussed before, a revolutionary way to trade the CCI, we're going to show you one of those methods by showing you the trading patterns on an indicator. The CCI is made up of a 14 period, which we use on all charts up to 60 minutes. And any chart of 60 minutes up, we use a setting of 20 on the CCI. That means on your daily, your weekly, monthly, quarterly, whatever you want, you would use a 20 CCI. On all charts up to 60 minutes, you use a 14 CCI setting. The CCI can be used on all kinds of charts, as it says right here. We can use it on tick, volume, range, daily, weekly. It doesn't make a difference, and it can be used on any kind of an index, stocks, commodities, futures, forex, whatever you want to use it for. It's the same settings for any trading vehicle. The Turbo CCI has a setting of 6, and as you can see here, the Turbo is this red line, and that is the Turbo CCI, and the black around the histogram is the regular CCI. So on the trading panel, we have two CCIs. We have a Turbo and we have the regular CCI. Okay, again, explaining a little bit about the price panel. You will see that we have a 0 line, we have the 100 lines, and we have the 200 lines. Again, the red is the Turbo CCI, and the black is the 14 CCI. Number 2, at the 100 lines, you will see on the trading panel, that's where you'll find our chop zone indicators, one of the revolutionary indicators that we discussed prior. And on the 200 line, which is number 3 and number 5, you will find our sidewinder, and that's where that will be color coded just like the chop zone indicator to help in decision making on some of our patterns. The Turbo CCI in the yellow here does two things for us. Number 1, we can draw trend lines with the Turbo and the 14 CCI to draw trend lines on the indicator, and we also use it as a warning. Now, what's unique about that is no other indicator has a Turbo that when it hooks inside the 14, it's telling us we're going to go to a sideways to an opposite bias, and there's nothing in the world of trading that will give you this kind of warning. This is also used as an area for some traders to take off multiple contracts. So when they're trading, and in this case they're going short, and the CCI Turbo hooks inside the regular, they will take off some contracts and leave runners going. So that's, again, a revolutionary new way that the CCI can help the traders. Trend identification using the CCI, the trend is defined by 6 bars above or below the 0 line. That sets the trend, and that is on any type of chart. It doesn't make a difference whether it's a daily or 60 minutes. 6 bars sets the trend. So what we use is we look for trend trades. We look to have at least 6 bars above or below the 0 line. We don't use any other method like a lot of people use lagging indicators such as moving averages, etc. We don't use any of that. We don't even use those stinking price bars to tell us where the trend is. We all set up on the CCI itself. On the trading panel, the 5th bar is color coded to give us a heads up that the next bar that prints will set the trend. Now let's take a look at that. Here is the CCI in a downtrend. As you look at those price bars, you can see we are on a downtrend, and you can see we got 6 bars below the 0 line. The yellow bar is the 5th, with the 6th bar setting the trend. So the yellow gives us a heads up, and the 6 bar sets the trend. Now you can see the CCI actually coming off of a kind of a sideways type market, and as the momentum starts to build, you can see the CCI stays below that zero line, and all of a sudden prices start to go with it, and that sets our trend to the downside. So that's a little bit, and you can see the colors here on the chop zone indicator and the sidewinder, and that's what a downtrend looks, a good downtrend looks like on a chart. There's what a good uptrend looks like on a chart with the CCI. You'll notice that we're above the zero line, and we have all these green bars in the histogram, and the CCI is staying above the zero line, and you can look at the prices. They're just showing you a nice upward trend. So it will stay green here in this case until we cross down below and get 6 bars below the zero line, and then it will change to a histogram on the red. So again, this is a little heads up what the CCI and the CCI panel looks like with the turbo and the regular 14 CCI. The other great thing about the CCI, which is quite unique, is that you can show, the CCI will show you actually a sideways type market. And that shows up on the CCI. When the CCI crosses the zero multiple times, not only crosses the zero line multiple times, but most of the time stays within the 100. As you can see, we go to the 100, maybe a bar above it a little bit, and comes right back in again. And that is telling you you have a sideways market. Now, what we look for on the sideways market, what we look for to start looking for patterns again, is that we look for the CCI to go to extremes. Extremes, again, is the 200 line. So this gives you a good indication of what a sideways market would look like. And lots of times, after you go into a sideways market here, the chop zone indicator will start to show multiple colors. And that will also give you another indication. Also, the sidewinder will also go red and yellow, and give you the strength that the trend, the red being a flat. And so there's a lot of heads up, and that's another reason why I can teach people to trade the CCI without watching those price bars, because it all is done for you right on the CCI indicator itself. Now if you look at the price bars, you can see exactly what it looked like on price bars. And really, you know, you might look to say, well, there was an uptrend here, and then there was a downtrend here, and there was an uptrend. But the CCI bouncing across that zero line gave you a good heads up that we could be going into a sideways market, and that's exactly what we were looking for. And then after that, as I said, what we will look for is for the CCI to go to extremes so that we can start looking for patterns once we get some momentum in going into the indicator. So again, initiating a trade after a trendless condition, we want the CCI to go to extremes, meaning we want it to go below the 200 lines. And this shows that momentum has returned, and then we'll be looking for entry patterns from there. And this is how we come out of a sideways type market. Okay, let's take a look at just exactly what I was saying. The CCI was in a sideways market. You see it going across the zero line a number of times. You see it approach the zero line, bounce away, approach it, bounce away, etc. You also notice it's staying between the hundreds. You'll also notice the multiple colors on the chop zone indicator. You also notice the yellow and red dominance on the sidewinder. And when we have this kind of development, as we just were talking about, we wait till it goes to extremes. Now let's look at this. We had a sideways condition. We go to extreme down here, it just touches the 200. And then we start looking for patterns after that. You also notice once it comes out of that sideways condition and we get that 200, then we start to get a trend. and then that's when we start looking for patterns. So that's what you look for when you're trading the CCI indicator. Here's another example of the same type of thing. We have CCI bouncing around the 100, crossing it numerous times, bouncing between the 100 lines, and what we look for, and you can see it on the price bars, it's also sideways type market. Then we get a little downtrend, and that gives us the extremes. Now that starts to show us that we got momentum coming back into the markets, and we start looking for patterns. And as you can see, we get an uptrend develop. Now as we get this uptrend develop, there's actually no reason for people to get into trades using standard technical analysis. And if you draw a trend line, say from here to here, you'll notice that most people get in after the trend line is broken or taking out this swing high. Well, we went to extremes, and so we start looking for patterns, and we did develop a trend changing pattern here, which I'll explain a little bit later. But we had developed a trend changing pattern that triggers you to get into this trade and follow that trend all the way up. So that's how you come out of a trendless type market and when the market starts to trend. Okay, how to identify the CCI patterns. Support and resistance, angles, and turbo. A little bit more in depth on the CCI. Here we have some general information. As we said earlier, when the CCI goes to the 200 lines, whether it's the minus 200 or the plus 200, we have a representation of an overbought, oversold condition. When it goes above the plus 200, we have an overbought condition, and below the 200 goes to an oversold condition. Now, unlike other indicators, when the CCI goes to these extreme conditions, you will notice it only stays 1 or 2 bars and then comes back right back away from that oversold, overbought condition. All other indicators, especially something like a stochastic, once it goes above plus 80, people will say, well, that's an overbought condition, but it can stay overbought for hours and hours and hours. The CCI is unique in this degree that once it gets to extremes, it usually 1 or 2 bars and hooks right back down again. So another beautiful thing about the CCI. The 100 lines is quite unique. These act as minor support or minor resistance, both 100, the plus 100 and the minus 100 are minor support and minor resistance. Now, again, what's unique about it here is that right on the indicator, this is telling you right now where you're going to have problems if you're in a trade, that you either have to break through support or you have to break through resistance. And this is the unique thing about the 100 line being a minor, and you're in a trade, you'll see that 100 line interaction. The other unique thing about the CCI indicator and revolutionary is the 0 line is major support and major resistance right now. In other words, you're looking to get into a trade, and you're like in a trend changing pattern. What you want to do is you look for support to be broken or resistance to be broken, and so your trade will continue through. And again, this is not a projection. This is not something that people do numbers on and all that kind of stuff. It is telling you where your problems lie right now. Really unique to the world of trading. So there is some major things and revolutionary things about the CCI that one should always remember. 0 line, major support, major resistance. The 100 lines, minor support and minor resistance. Okay, as I discussed before about angles. Angles are really very important in trading the CCI. Let's take a look. We have a sharp angle here, and you can see the sharp angle up. That shows a strong reversal. Why do I say a strong reversal? Because it's showing that in this case you had some selling come in, and all of a sudden now you have a large amount of buying come in, and that creates that angle and showing momentum. Remember, you're trading a momentum indicator. You would expect this thing to be momentuming, and if it's not, the CCI will show you that. Look at the angle of the CCI down here. Very flat, showing not a lot of conviction to the upside. Yes, there is some buying, but not a lot. So the angles are very important in trading the CCI. The same thing here, a hook from extreme, beautiful angle up, showing that there's profit taking place. People are in an oversold condition and getting out of their contracts. Or you can see one here that people are just staying with it. There's a little bit of buying, a little short covering going on, but not a heck of a lot. So angles are really very important in trading the CCI. Okay, we talked about the turbo crossing above the zero line and crossing into the 14 CCI. There's a couple conditions. When the CCI goes above, say, the plus 100 here, and the turbo crosses inside below the minus 100, that's kind of a weak type move. What we want to look for when we're in a trade is we want to see that turbo cross into the CCI above the plus 100, and that shows us a stronger crossing and a good place to take off contracts. Why I say stronger crossing? Because now we see more buying, more profit taking come in, and people are starting to get out of some contracts, etc. And so that's why looking at where this turbo crosses the 14 CCI gives you a nice heads up. And it's the same way on the downside. A cross between the 0 and the minus 100 is a weaker cross than one when it crosses below the minus 100 and the 200. Also, what this tells you is that we're going to go into a sideways type market on this strong cross here, a sideways type market, and with a slightly upward bias or an opposite bias of the down mode, which would be up. We're going to go sideways with a slight up bias. I haven't figured out yet exactly how much and how far, but if I could do that, that would be a tremendous help for traders. But having the turbo CCI gives us that great warning that this can happen. This definitely will help you as traders if you start to understand all this stuff. Now that's the end of that, and we will get into the general information